Discussion to talk more about the impact on textiles. We have with us Prerna Jhunjhunwala, who's the Vice President at Elara Capital, joining in on the line for her quick take. Well, Prerna, welcome to the show. Bangladesh has around 35% on textile imports in terms of a tariff, and that's a slight reduction from, say, what was imposed in April this year of around 37%. Vietnam, 20% in terms of textile imports. So given this, where does India stand to benefit?
Hello. In India, it all depends on the trade deal that is getting signed with the USA. As of now, with the no trade deal, we are at 26% after the baseline tariff gets over. But if we are signing a trade deal, we are confident that the tariff rate for India would be lower than these two countries, which should benefit in Indian textile sector for sure. Given that our players, our cost structure is positive, except the advantage that these countries.
What about
to gain market share?
Okay, we have you on a scratchy line, Prerna. We're just trying to repatch that connection. India doesn't have a trade deal right now. It's about 28% is the tariff. They've shot off a letter to Bangladesh saying that it'll be 35%. Could you give us a sense on what Bangladesh's share of revenue from the US is? How does that compare with India? And what is the differential in cost of production for both Bangladesh and India?
Yeah, so the major differential on the cost front for Bangladesh and India is the labor advantage that they have. Their cost of labor is around $115 per month, whereas for India it is between $150 to $170 per month. So that would translate to a disadvantage for Indian cost structure by about 10 to 12%, which gets settled if the tariff rates are higher for Bangladesh against India. In Bangladesh market share for apparel is about 9.3% of which equates to around $7.3 billion for the US imports, whereas for India it is 5.9%, which equates to around $4.7 billion in CY24. So we have we have a differential of about 4% for total apparel imports of US, and that's where the opportunity lies.
Prerna, what about if the rate for India, there's no change in that, it's at that 26% which is currently there, then would we still have a benefit against Bangladesh, or that's not possible then? Given that, you're talking about the labor cost as well.
I think we will still have benefit against Bangladesh because we'll at least be at par on the cost structure, because as I mentioned earlier, we are at a 10 to 12% disadvantage on the cost structure because of labor. And that gets settled with the tariff differential.
Okay. Well, Prerna, where do we come in when it comes to taking advantage or real advantage of the opportunity in terms of scale and manufacturing capacity?
So Bangladesh is definitely much higher on scale than us today. They are at around $40 billion of overall exports of garmenting to the world as compared to India, which is at about $17 billion. So we need to definitely scale up our manufacturing capacities in the garmenting for sure to take advantage meaningfully from this tariff differential.
Prerna, there were some reports that were also suggesting, more like channel checks suggesting that, currently in terms of demand trends, there's high demand coming in for the spinning yarn, spinning mill side. Is that something you've seen on ground, especially, players given in Tripura and the China Plus One is working out for them? Is that something you've watched out for right now?
As of now, we're not seeing a very huge improvement in demand because there is a lot of uncertainty at this point in time from U.S. markets. Orders from U.S. markets are not at par with what they were at earlier in the same months. So export markets are not very favorable at this point in time. And in Indian markets also, we are not seeing a huge demand propping up because of weakness in the total apparel industry in the Indian market. So we're not seeing a major improvement or any order inflow in a major term for Indian spinners at this point in time.
So given all things where we stand with, tariffs, global demand, the raw material prices, our production, our costs, everything considered, what, according to you, would be the top picks that one should look at if they want to make a bet on the textile space? If you could give us a couple of names.
So we have a buy rating on Arvind Limited. That is our top pick from our coverage. We also like home textile players who have capacities in place and are having client relationships currently with most of the geographies that we are signing FTAs with, because India is not only a story on US tariff differential, it is also a story which is structurally panning out for FTAs being signed globally, which government is trying hard. So, and textiles will be a major beneficiary of the same. So, home textile players who are having exposure to the and European markets as client relationship should gain and as well, along with garment company. So Indocount and Welspun are our preferred companies in home textile space. In garmenting, any company which is expanding capacities should gain. So we like KPR from long-term perspective, plus Pearl Global, Gokalda.
Okay.
Sure. Prerna, just... I think we've got on a bad line, but I'm just going to try my luck. From a company perspective, not from a picks perspective, from a company perspective, which one do you think would probably be most at an advantage to take, to benefit?
So from the company specific, that's what I mentioned, that the companies which will benefit the most are the companies which are expanding the most, because India doesn't have capacities. So companies like Pearl Global, Kitex, who are expanding real time to gain advantage of this situation, should benefit, though we do not have any rating on these companies.
Okay. Companies who are expanding will benefit the most. Thank you so much, Prerna, for joining in with us and giving us your views on the textile sector and what we're expecting in terms of Trump tariffs and which companies would benefit as well. But on that note, we're actually going to slip into a very short break. On the other side, we'll come back and Manisha Gupta will join in with us with Sumit Gupta of Elara Global Commodities. Stay tuned in for that.